Hey, what's up everyone? This is Sylvester, founder of FX Lifestyle, TradeYourFuture.com. In this video, we're going to go over market structure and divergence and how I use those two in conjunction to verify our market patterns when they form, as well as with other confirmations. So let's get right into it. I got my chart pulled up, got the British pound versus Japanese yen, and let's go up to the H4. I'm just going to take a look through here. Now, before we start going over them, and here, some of you might already know about these, but if you're new, go on our website, TradeYourFuture.com, and you'll find a link to download, if you haven't yet, the FXL market patterns cheat sheet, and print that out or keep it, if you have more than one screen for your trading, keep it on a separate screen. Have these up in front of you when you're trading, especially if you're not too familiar with them just yet. They'll definitely help you identify these patterns better and easier, and they're definitely an important tool. Market structure is very important in your trading. It's going to help build a foundation in your understanding of how price moves and the levels it respects, like we already went over: support and resistance, supply and demand. And market structure is just going to give you a little bit bigger picture of how price moves and why it moves the way it does, and it'll definitely help you a lot more in your trading. So first market pattern we're going to go over on the cheat sheet. Actually, keep in mind there is more patterns, but these are the patterns that I look for. These are the patterns I just pretty much trade in my strategy. I will sometimes use other ones, but these are the main ones, and this is all about my strategy, so I'm going to just share that with you. So the first one that we're going to go over is a double top, and I'm going to draw these out here real quick. And then we're going to look at the chart and try to find them and show you how they work. Now, another name I like to use for double tops as well is your M. Because double tops, the way I have it drawn right now, this is a perfect double top. This is price coming up to a resistance point up here. Let me write that in there actually. So R for resistance, price coming back down to form the neckline, and then coming back up to resistance. And in this case, it's a perfect double top because it literally hit this resistance zone right in the same spot and then came back down. But that is not the case in the market. If that was the case, then we would all be filthy rich and no one would fail in trading because it will just make everything textbook style, make it easy. And that is where people fail actually, because they go to learn Forex and they go through free courses and they go on Google and they search different things and learn them, but none of these like articles or courses that you usually find for free go into detail or really show you how they see things. And you'll expect this to happen and you're just not going to see it, and you're going to lose opportunities, or you're just not really going to know how to trade them. So look at double tops as the letter M, and when we go start looking for them on the charts, you'll see this more of the shape of the letter M than you're going to see like a perfect double top like this. But going back to the double top, so this is your double top. So this is price coming up to hit a resistance, comes down to form a neckline, which is this middle point right here, called the neckline. And then price will reverse off this point here and go up to retest this resistance zone again. And when it comes to retest this resistance zone, it's going to come back down. Now, the way we're going to trade a double top, and this is all explained in my cheat sheet as well, so keep that in front of you while you're trading just in case you forget some of this, or if you want to take notes, grab a notepad and actually even just draw these out by hand and write some of this stuff down. So after price hits the neckline, actually, you know what, reverse that. Before we even go into that, let's just dissect it right down. Price goes up to resistance. We see price going up here and then coming back down to form a neckline. And then you'll see price reversing. As it's reversing, before it even gets up here, a way that you can validate if this is going to be a double top is you're going to grab your Fibonacci retracement tool. And there'll be a whole separate video on Fibonacci, but real quick, what you're going to do is you're going to grab it from the low to the high. And this is a little nice trick in validating your double top and double bottoms, is double tops and double bottoms love to form on the 55th. And when I see price come down to where I feel it might be forming a neckline, I see it going back up, I grab my Fibonacci and I measure this out. And if I see it right on the 50, I know there's a good chance there's a double top forming. Now, I don't know if price is going to actually reverse off of here or somewhere up here, but we'll get into that a little bit later. But there's other confirmations to look for. So your first confirmation could be to do exactly this and draw your retracement and see where this neckline, where price was actually reversing, and if it's off the 50 fib, that's a strong indication that this is going to be a valid double top. Now, if price reverses off, let's say not the 50, but the 61.8 or even the 38.2, that doesn't necessarily invalidate the double top. It's just more times than not you'll see it go off to 50 and actually be valid. But it could reverse off of 38.2 or 61.8 even and still be a valid double top. But this will be a strong indication for you. So we do that, and once we get that, we wait for price to come back up to this resistance zone or somewhere around here to be rejected. And the next confirmation we look for are your candlestick reversal patterns. The main ones that I look for, and there's actually also a cheat sheet. I just try to make everything easy for you guys on the website as well if you don't have it yet. And it's got all the candlestick reversal patterns. But these are the main ones that I look for. I either look for in this case, I'm going to be looking for a bearish engulfing candle, or I will be looking for a evening star candle to form. Those will be the main two ones that I look for a reversal. And the way you want to look at these is the candlestick confirmations we get here will be the drive of what's going to push price down to here, like 90% of the time. Without this confirmation, we do not enter short, even just because we see a double top form. So we need a bearish engulfing or a evening star pattern to form up here to give us the confirmation of entering. Now this won't be just the only confirmation, but our first was the 50 fib neckline. Our second is going to be price stalling and forming a candlestick reversal pattern. And in this video, we're also going to go over bearish divergence. So those will be our three confirmations right there. Other than the resistance point being 1, we have our neckline, we are going to look for bearish divergence, and then we're going to look for a bearish engulfing or evening star pattern. And those will be 4 confirmations right there by themselves that we look for a validated double top and to go short on a trade. Now, the way price will work, the safest entry to enter on a double top is for a break of the neckline. This is what truly will validate this. It's the break of the neckline, the retest of the neckline, and then getting a bearish engulfing or evening star candle pattern form up here and price shooting down. Now, I am a more aggressive trader. I've also have been trading for about 4 years now, so I've learned my own style of what and just kind of recognize what I see in the market and what are my confirmations, and I can be a little more risky, and that's just my style and I like it. And you just got to find what's good with you. You could be a risky trader, you might be more conservative, you might be a little mix of both. You got to find that right balance for yourself. Me personally, I will enter off of the 50 neckline, resistance, bearish divergence, and as soon as I get this candlestick confirmation, I'll enter up here. And at that point, I will wait to either close out my positions right on the neckline or have price break through, and then I watch for a retest, and then that will validate whether I actually close out my positions, if just in case price goes up, or if it actually forms another bearish engulfing or evening star pattern here. I will actually add entries and add to my position, and then take this right down. And the take profit will be the next support zone, which will be usually price will be finding support here, or there'll be some type of support level there, or it could be up here, whichever way. We're going to get into that later, but your take profit will be the next support zone or Fibonacci extension point, which we'll go over later. But for the basics, this is your double top and how to trade it. Now, what you want to be careful with is price can actually come down to this neckline and respect it and find this as a support and actually form a double bottom within this double top and then go up. And let's move this over real quick. And price can actually then go up to this resistance level, respect it for the third time, and then come back down and break this neckline, retest, and then come back down. And in this case, when this happens, what we get is a triple top, which is also a pattern that we look for. But more times than not, you're going to see more double bottoms than more double tops than triple tops form. But these can form, and I do look for these as well. And this is where price will fake you out and form a double bottom as the neckline and then go up. And then this actually traps buyers because they're going to assume there's a double bottom. This is the double bottom neckline, and they're waiting for it to break, but it actually retests it, forms another double top within this double bottom, and it gets a little confusing, but just keep a lookout for that. You'll see it as you go, and I'm just letting you guys know ahead of time to know what to look for. So honestly, with this video, I recommend you watch it a couple times. That's really with any of these, but especially this one, because if you're new or you have not seen something like this before, especially with these market patterns, this could get a little confusing because there is different scenarios of what can happen, and that's what we try and do. And that's how I look at the market. I look at it as a puzzle, and I'm always trying to solve it. And I always look for different scenarios of what can happen, won't happen, might happen, and that's what helps me know when to close out, when to take profit, when to cut my losses, and know whether I'm going to be buying or selling on any individual pair that I'm trading. So triple top comes down, breaks the neckline. Again, this is your safest entry point. Is right on the retest of this neckline. Now the next one we're going to get into is the double bottom. So double bottom is literally the opposite of your double top. Price came down and found support. We like to trade these after a downtrend, and we like to trade these after an uptrend. That's where we prefer to have these form, and that's when we're going to trade them. So price found support, came up, formed a neckline. Price found support, price came up. We wait for it to break the neckline, retest it, give us a bullish candlestick confirmation, and then price goes up. This will be your safest entry. As it is with the double top, it is going to be with the double bottom. Make this blue. So this is your support. This is your neckline. And this will be your safest entry. Now, just like we did with the double top, we're going to be looking for bullish divergence. When we see price forming a double bottom, we look at our RSI for bullish divergence. And we look for a bullish engulfing candle or a morning star candle to form, and that's going to be our confirmation to enter on this trade. And again, that would be us entering here and then taking this down. Now, same thing happens with a double bottom. That can happen with the double top, as I mentioned. Price can come down to this neckline and actually respect this neckline and form a triple bottom. And then price will actually respect this support zone again and then go up, break, retest, and go up. Or it is possible that price is actually forming a double bottom, but then forms a double top off the neckline and actually breaks through the support zone, goes up to retest, and then goes back down. So as you can see, the market can play games. It can trick you, and if you are an amateur trader and don't know to look out for this, it will trick you and it'll force you to buy here and expect it to go all the way up there. You'll see price respect the neckline, come back down to your support zone, and at this point, you don't want to lose money. You're trying to gain money. You're being greedy, so you made some profit here, you're expecting to go up there, price reverses quickly right back down, you're figuring you're about break even, you're still there, you're trying to see if it's going to hold this up, and then price breaks through it, and you either blow your account or you're going to lose a lot of money or whatnot, especially if you're not using proper risk management. So it's definitely something to look out for. And you'll learn to catch these as you go. But if you're placing your trade here or here, you wait for the neckline to come down and come down to the neckline, close out your profits, wait for it to break, see if it goes down to retest, and then you could add more positions or go into this trade again and then ride it out. Now there are times where the price will break the double bottom or double top neckline and just go on its merry way, and it doesn't come back down to retest. But more times than not, it does retest, and then that gives you a more confirmation that it's going to follow suit, and it's going to give you a safer entry with very minimal drawdown. So those are going to be your double top, double bottom, triple top, triple bottoms. Another pattern I like to trade is called a head and shoulders pattern. I'm going to draw this one down here. Again, if you have a notepad, take some notes, write this stuff down. Head and shoulders pattern will be literally what it is. You have a left shoulder, you have a head, and then you have a right shoulder. This will be your head and shoulders pattern. Now the way we draw the neckline for a head and shoulders pattern is we take where the head started from here to where the head ended here. And more times than not, what's going to validate a head and shoulders pattern even more, let me just redraw this, is the neckline will be sloping downwards. The headline could be sloping upwards, but I personally don't trade those unless I really get a breakdown and a retest and then like a real strong confirmation it's going to go down. But more times than not, the head and shoulders pattern becomes validated when it has a downward slope neckline. So this would have been like a downward slope neckline looking head and shoulders, where it's not going to be your textbook just the way I first drew it, where it's like shoulder, head, shoulder, and they're all equal lengths, and what, like the right shoulder is the same size as the left shoulder, they go all right to the same point, and the head is perfectly straight and whatnot. The neckline can sometimes come out that way, but we look for a downward slope, and that validates the head and shoulders more. Now what's going to actually validate a head and shoulders that I look for, what just happened here? All right, so what I look for is I look for the right shoulder to come off the 50 fib retracement, just like we were looking at the neckline for the double tops and double bottoms to come off the 50 fib right here to help validate it even more. Nice little trick for the head and shoulders right shoulder. The right shoulder likes to go off the 50 fib as well. So I'll actually, after this forms and I see price coming up here, I'm going to grab my retracement too from this high to this low, and wow, perfect. I didn't even try to do that. And again, like I mentioned, it just loves that 50, the 50 Fibonacci point. And once I see that and I see the shoulder forming off of here and then retracing, now I'm seeing a head and shoulders forming. Now it's validating it even more for me. Now with the head and shoulders pattern, it likes to play tricks. So head and shoulders pattern, the absolute best time to enter will be on the break of this trend of this neckline. It has to clearly break it, and it has to retest this neckline and then go down. You will see this happen so often where you get a nice head and shoulders pattern and price just breaks through that neckline just to fake you out, and it's going to shoot back up. So the main patterns you're going to look for are going to be your double bottoms, double tops, triple bottoms. But the head and shoulders patterns will happen, and they do work, but you just have to know how to trade them. So keep in mind, with these, you can be more aggressive and get out and win on most of your trades without waiting for it to break the neckline and retest it. With the head and shoulders, always wait for that break and retest before entering. But again, take your Fibonacci retracement. Right shoulder loves bouncing off the 50 fib. That's a confirmation for you. When it's coming off of here, if you want to be really aggressive, which I don't recommend, but if you get a candlestick reversal pattern. Now this is a bearish pattern, so we're going to look for the bearish engulfing and the evening star pattern as well. If you see that form over here, you could take this trade because more likely than not, you not just a 50 fib, but you could also be at a resistance level in this area. You could have other confirmations and enter this and then just take profit at the neckline and then just wait for it to break, retest, and then enter again on this trade. But this will be your head and shoulders pattern. I'm just going to label this out real quick just in case someone didn't catch this. This is your left shoulder, so LS, left shoulder. This will be your head. And this would be your right shoulder. Now, this is a bearish market pattern. So when we see these form, we're going to be looking for short positions. The next pattern is going to be the opposite of the head and shoulders, and that's going to be a inverse head and shoulders. So we're going to have a shoulder form, so we're going to have price come down, go back up. It's going to come all the way down, find support down here somewhere. It's going to go back up. Now with the inverse head and shoulders, you want to look, well I prefer, but I suggest you follow it. So you want to look for a upward slope neckline. So as you can see, we got our head, we have our left shoulder, and we have our right shoulder. And we draw our neckline from the first start of the head to the second start, basically from the end of the shoulder to the start of the next shoulder. That's how we draw our neckline of our inverse head and shoulders pattern. So this will be our left shoulder. Now we look for this pattern near a support zone, near a demand zone. After a downtrend, this will be your reversal, your bullish reversal pattern. This is our right shoulder. Same thing, neat trick, take your Fibonacci and take it from this low to this high. And price in the right shoulder will be the same thing as in the double top, double bottom neckline, and the right shoulder off the regular head and shoulders that we just went over. The right shoulder will tend to want to bounce off the Fibonacci 50 retracement level. And when I see this forming, you'll see this ahead of time a lot quicker than you will in the double bottoms and double tops. But when you see this happen forming, and then you see like a right shoulder possibly happening, if you see it bounce off the 50, that's an extra confirmation for you, especially with the upward slope neckline. And then you watch for a bullish reversal candlestick happen here, and you can enter at this point here and then go up. But again, just like with the head and shoulders, I recommend taking profit at the neckline because it can be just as probable with the inverse as it is with the regular head and shoulders that price will reverse off of here and come back down. So you're going to wait for the break of the neckline, come back down, retest, and then shoot up. Now when price does this with the head and shoulders or the inverse head and shoulders where it breaks, retests, it usually aggressively goes in the favor. There is times where it can do the fake breakout, so keep that in mind. It will do that. So always wait for that retest, and then here wait for your bullish confirmation, and then go up. And then if you want to be aggressive and just feel like it's coming to retest and it's going to shoot up and you don't want to miss this move because again it's going to shoot up aggressively or shoot down aggressively on the head and shoulders, place like a buy stop position so price can hit it, trigger it, or go in on a buy and then just set a tight stop loss or something like that if you want to be aggressive. So these are the patterns that I look for. This is how I trade them. These are some little tips like the 50 fib with the necklines and the right shoulders that I look for as confirmations. The upward slope line of an inverse head and shoulder and the downward slope of a head and shoulders. So take notes, write all this down, watch this video over and over again so you can catch this stuff that you might have not caught the first time. And just review it and back test it. So that's what we're going to do now. We're going to back test these patterns. So we're going to look, let's just keep it actually on the British pound and the yen. Let's look through here. Let me just get out of here because it's all written down. As you guys can see, I was already doing some stuff here. was going over this pattern with someone else, one of my friends actually, just trying to get into trading. So I've been doing some webinars with them. So let's just go further back. Let's go on the daily here. All right. Now, actually, before we do that, I got ahead of myself. So we're going to look for somewhere around here. I'm sure we can find plenty. We're going to go to indicators though. So for our divergence, we're going to be looking to use the indicator called relative strength index. If you don't know yet about it, so we're going to search relative. It's going to pop up as relative strength index. Click that once, and then you're going to come down here to where this little wrench is. Click on that. We're going to change our length to 20. These are the exact RSI settings I use, whether I'm day trading or swing trading. I feel that this RSI settings are very powerful, and you'll kind of come to see why. But it's got a very smooth line. It follows price very closely while still being able to show divergence. So then we're going to go back to style. I like to make my RSI black. We're going to take this background out. We're going to make the line a little bit thicker. We're going to click OK. Okay. So now we're going to be looking for divergence with our market patterns. So I'm going to teach you divergence as we look for market patterns. So let's take a look here. Let's start off with a double bottom. Let's see if we can find a double bottom here. Let's actually go down to the 1 hour. I think we'll be able to find more examples in the 1 hour. All right, so one quick example I could see here. You can see price came down to this point here, came up here, came down. Now this price stayed relatively straight, meaning it found support near the same level. It didn't go down lower than this low here. It's pretty much straight there. We could see it went up, formed this little neckline, came down, and then went back up. Now, divergence, bullish divergence, will be when our RSI is making a higher low and our price is making a lower low, or it's staying straight. So bullish divergence is when price makes a lower low or equal low and the RSI is making a higher low. So we look for those when we make the market pattern of a double bottom when we see that form. So we can see the price made the neckline, came down, and the RSI was actually making a higher low at that time. So that's going to show you a shift of momentum in price before actually price is doing it. And that's a strong indication. As you can see, after the double bottom formed, we had the divergence and price went right up from there. So that's one example there. Let's see if we can find another one. Go back up here. Now we look for divergence, bullish divergence, real quick before I get ahead of myself, which I tend to do that a lot. We look for bullish divergence on the bottom of the RSI, under the 30 level or near the 30 level, and we look for bearish divergence above 70 or near the 70 level. So make sure you look for that. Try not to look for them in the middle of the RSI, anywhere near mid-trend, because they're not going to be as reliable signals. Okay, so quick example here of a double top actually. So we had price come up to this point. Came back down, formed the neckline, came back up, made a higher high. As you can see, the RSI pretty much stayed level. It formed a double top of its own, but price was actually made a high and then made a higher high. So that's signaling you divergence. That's showing you a shift of momentum. And RSI is not actually doing what price is doing. It's actually making it's going to most of the time make a lower high, or it's going to be equal and not actually following price and making a higher high. And that's going to show you divergence. And that's going to signal a change in momentum, and then that's where you could be placing your shorts. And if you notice, after you got this evening star pattern, you entered over here, you saw price consolidate a little bit, and then it just dropped. And that right there would have been a nice 148.5 all the way down to here, 148.5. So you're looking at 75. You're looking at 125 pips, easy, just like that. All right. Now, next one we can look for is actually right here as well. You could see price made a high right at this point here and made a higher high there. And then we see RSI actually made a lower high. It came here and it came right back down and made a lower high. And that's a shift in momentum. Now, this is a double top, so we're going to draw this out. Grab our our Fibonacci retracement tool. Actually, I'm going to draw it off of here. This is technically the low of this one. I'm going to draw up to this high. So we have this leg here, this extension. And this is where our neckline formed off of, was this move up. And you could see right here, perfect example. The 50 fib is right at the neckline. And you could actually see price came down, went up, came down. It actually formed a double bottom on the neckline, which is actually even more indication that I haven't went over before. But you see a double bottom form on a 50 fib, not double bottom like I mentioned before, where it came up, came down, and then went up, but a smaller double bottom on the 50 fib actually gives you more confirmation. Now price went back up, retested this resistance level. As you can see, that was resistance here based off of what we saw there. So we draw our resistance. See price stall there at that point. And you can actually see that respected it here again. So we had a double top form, M figure. Price up here printed a bearish engulfing candle. Let me just zoom in. You see that? So we have a bullish that went up right up to resistance, formed a higher high. At that same time, we see RSI forming a lower high. We already see that neckline bounced off to 50. We see a double bottom that went off to 50. So that's like 3 confirmations right there. Price went up, 4th confirmation, bearish engulfing candle. We enter right here. And price did go up a little bit, but it came right back down, tested this neckline, faked people out, came back down. So it's not perfect. It's not the way I've drawn it out, that it's going to come down and go up and down. But you're going to get these variations. But these confirmations will give you more reason to validate this double top and keep your positions on the short. But even if you entered off of here and came back down to here, that was an easy 40 pips right there off of 1 hour chart. I mean, you could do 40 pips a day and you could make a lot of money off of that. So just that alone was 40 pips. If you came down to this bottom here, which you could have closed out on the next support level, which would have been right at this point here. This would have been your next support level. You closed out right here. And you're talking from, say, 148 all the way up to 148.9 almost, 148.8. That's 80 pips right there you could have caught. So there's your double top. There's your bearish divergence. There's the 50 fib on the neckline. There's a double bottom on the 50 neckline. There's your engulfing, just multiple confirmations. And that's exactly what we look for. We always want multiple confirmations. Next spot you could see, if you were drawing out your support and resistance, this was a resistance level here, which price broke, came down, came up, retested it. Now it's a new support. So we're going to draw this out. We saw price come up here. Now we saw price come down to this level here. We're on a 200 EMA. We're just testing. We're on a support zone. See price struggling here. We see some long wicks. We see some rejection. Now RSI is right on the bottom of the 30. We see it actually making higher lows while price is just stagnant, not making higher lows or lower lows, but it's stagnant. So divergence doesn't always have to be the opposite, but it could be where price is stagnant and it's just straight, and this is making higher lows. That's bullish divergence. That signal alone there, with the confluence of being in a support zone, having bullish divergence, candlestick confirmation, bullish engulfing, you enter here and it goes up to your next resistance, and you're catching a nice 30-40 pips. And again, this is on the 1 hour chart. You can do this on any time frame. The longer the time frame, the stronger it is, and the more pips you can catch. So there's an example of double top, double bottom. Let's look for some head and shoulders real quick. Let's look for that. Oh, perfect. Right here. So we have a head and shoulders pattern form. So we're going to grab our neckline. We're going to draw it out since this is where the head formed. This is the right shoulder. This is the left shoulder. Now the right shoulder can also form a double top and then come back down, where it actually tests this neckline and it doesn't break it and it goes up, but then this resistance level stops it. In this case, we're not going to be on the 50 retracement level with our fib, but actually, no, actually we're perfect. Look at that. I mean, I can't make this stuff up. You got the right shoulder forming right off the 50 fib and came right back down. Now in this scenario, it came down aggressively, so it's not always going to retest. But that alone right here, you have a head and shoulders form. We counted the shoulder right here on the 50 fib, which is another confirmation. We had a bearish engulfing right here, and this could have been your entry as well. This would have been a little bit more aggressive, but that could have been an entry. Now if we go over to, let's just go on a lower time frame. Alright, it's just actually my trend line wasn't showing. I just wanted to come down to the 30-minute to see actually if I drew this out, if we actually saw price break through here and retest it, because price will do that. Sometimes you have to go down to the lower time frame to be able to see it. And it might not always, if we're on the 1 hour, you might not actually see a 1 hour bar come and then come to retest. But if you go down to the 30-minute or 15-minute, maybe even the 5-minute, you'll see a bar come down and retest. Let me actually see if I could zoom in there to the 5-minute chart. I hate that it does that. I actually have to change this somewhere in the settings. I haven't messed around with it yet. I usually stay on the higher time frame, so I never have to do this. But on these lower time frames, it gets difficult. When you zoom in, it just kind of brings you back to real time. But let's zoom in on this 5-minute chart here. Let's see if we could see a break and retest. So this would have been, see, it's tough to draw the neckline on the 5-minute, but this would have been most likely like what the neckline would have been. So price actually kind of faked people out right here. This would have been a signal to short, and it just went back up. But actually what you would have seen here real quick, it's kind of hard to see, but once you train your eye, you'll see it. This is actually a left shoulder. This is actually your head right here. And then this is your right shoulder. It's funny how that happened. And it's crazy that actually I pointed that out. But again, everything takes time. But once you train your eye to be able to see this stuff a lot easier, it's gonna make your trading so much easier. It's just gonna happen, and that's really what happens with trading. You just have to put your time in it. You gotta fail multiple times, but as long as you're learning off your mistakes, at some point, someday, it's literally just gonna happen. Like you're just gonna get this feeling of where it's just you're gonna be winning most of the time because you're gonna have a strategy. You're gonna know what to look for. It's just gonna make sense. It's just gonna hit. But actually see right here, this would have faked a lot of people out, but if you had an eye for seeing these market patterns, you could see a left shoulder, a head, a right shoulder. You could see your neckline even drawn out. You could even see your neckline drawn out right here, and boom, price went up, retested, and then shot up just off of this little inverse head and shoulders pattern. So this would have faked out a lot of people, but then it came up here, and actually we do see a retest. So if you do minimize down to the lower time frame, you could possibly see this. especially if you're trading off the 1 hour. You could go down as low as the 5-minute, 15-minute time frames to be able to see stuff like this. You can see price broke right through it, came up and retested it perfectly. We got a bearish engulfing candle. There's our entry. Boom, price shoots down. Nice and easy. You just have to know what to look for, and it just takes time. Again, I'm just gonna keep saying that it takes time. Like a lot of people I've met learned about Forex, they see big profits and they just expect to be able to just do that real quick, like it's like a get rich quick thing, and it's really not. So it just takes time, patience, failure. You just have to fail. It's gonna keep failing. So this is another double top. This is kind of sloppy. Now this one's not hitting the 50 fib, which is okay. It doesn't invalidate it, but it just adds extra confirmation. But you could see price went up. Price came down to the neckline. Price went up. It's actually formed like a little double top within this double top, which will happen. Price came down, broke this neckline. You're going to get these little fake outs. It's not going to be a perfect retest. But look at that. Came up. And then price shot right back down. Perfect. At the same time, price may actually made a higher high. And the RSI is making a lower high. So there was our bearish divergence. There was a neckline. You can see price forming a double top. We could even see, like, candlestick pattern wise, we didn't really have this as a confirmation of a reversal. This could somewhat pass as an evening star, but I wouldn't have counted it. It's just kind of, it's just too on the edge. But even if you entered right up to here, you're gonna get a little bit of drawdown. Like there's no perfect entry, but you got, let's say 146.8 went up against you, say 20 pips max. That's nothing. Especially when you're going to be trying to catch double that. So your entry here, a little bit drawdown for it to go up and retest this, or if you just didn't go off this, because again it's kind of on the edge with this evening star pattern, you wait for it to actually print you this bearish engulf, and you enter right over here. I mean, your drawdown was like 10 pips, and price went right down, retest, right down, and you would have caught, say, right off here, 146.8. He would have came down right to your next support zone. So you would have exited out right here. You're looking at 120 pips. You're looking at 100 pips roughly. Figure 80, 60. You're not trying to be greedy. I mean, just off of that alone, and those are easy to spot. You just have to train your eye. Now let's look for some other confirmations here. Oh, this one's a perfect double top. We're going to be right near resistance. Let's grab our fib. From this high, from this low to this high. Now, it's not perfectly on the 50, but it's right near it. Actually went right to closer to the 61.8. But either way, we actually see a sharp down, sharp up move. But the main thing that you're going to notice is bearish divergence. RSI is making a lower high. Price is making a higher high. We get down up to this point, we see rejection. This is at this point here, we see RSI making a lower high where price made a higher high. We enter right off of this candlestick here. Not maybe necessarily this one just yet, but let's say that one to be more conservative, because that's going to be your ultimate engulfing. We sell here, price goes down in our favor, a good 30 pips. Price didn't come back up here, which just went to retest the zone again. And sometimes, as you've already seen, that's going to form a double top within a double top, but it came right up to here. So then if we entered right here, you're looking at, you could have went negative 10 pips and then price shot right back down. And you can see that price, when it broke through, you're going to see price actually breaking two necklines. So this was the bigger double top, and this was a smaller one within it. This is your double top neckline right here, which actually, let's measure this fib out. Boom. I mean, it's not right there, but it's literally right there. I went past 38.2, you're right at the 50. So clearly I can't make this stuff up. But it's a neat little trick, and definitely use it. It helps a lot. So this neckline actually went right off the 50, so it validated it even more. And this was a double top within a double top, which is a perfect signal. Whenever I do see those, that's just extra confirmation. You'll see me stack in like 6-7 positions. But you see the double top came down, broke through the neckline, see came right back up to retest, and then shot back down. Now as it shot back down to here, it actually broke this neckline of this bigger double top. And what do you see? Price went up to retest. At the same time, it was actually retesting roughly the 200 EMA that it just broke down under. And from this point here, we got a bearish engulfing. And look at that. Bearish engulfing, we enter, price goes slightly up, and then comes right back down. And as we have our support and resistance drawn, that was our support. Price came down, created a double top, then it came down to here, which this right here was a support zone. So price found a support here, which then formed another double top. Is just now breaking this resistance area up here, which if I go in the higher time frame, I'd be able to identify on a bigger supply zone. But price came down to here, right at the 50 fib. Right at the 50 fib, and the support came up, went right back down, broke the neckline, retested it, came down, broke the neckline of the bigger double top, retested it. I mean, you had multiple entries here. You easily could have caught anywhere from here or here to 148.3, literally like down to here. You're looking at 130 pips. Come all the way back down to here, you're looking at 200 pips. I mean, this is in hindsight. Keep in mind, would you have known to go all the way down here? No, because you would have had multiple points here. You can see it was a resistance. You would have drawn this out. And this is actually where price found support as we draw our support and resistance. But we could have had this point here as well. This is where price stalled as well. But you look at these levels here, and when you have your support and resistance drawn out, you can wait and see what price is doing around it, whether it's breaking it, whether it's retesting it when it breaks it. And you can see if you zoom in, price came down all the way to this point sharply, which this would have been just a big drop. You have the long wick up, so you could see that this doji right here with this long wick was just showing us rejection and this supporting this level here. And then price went up. And as it went up through here, it pretty much broke right through this point. But you knew your neckline from this double top was here. So now you're looking at it as like, okay, it broke the neckline. It's going to go up to retest it. And it already broke our 200 EMA. So it's going up to retest it. And then here you watch to either add entries or just enter your trade if you haven't already been in it. And then price goes right back down. And you can see it just broke through these zones. And you'll just have them drawn out like we went over in the previous video in support and resistance. You're just going to have these drawn out. And you can see price came down to it and stalled right around here. You could even use this point here because that was a low where price sharply went down to. So this would be a nice actually support that would have been drawn out because you could see price sharply went right down to it, right at the 200 EMA. It found support. When you have a big drop like that, that support is usually a pretty valid point. So you could see price came down here. It's just kind of messing around, but just like that. I mean, you just look for these patterns, and the best way to find these is, like I said, they're not going to be perfect. They're going to look like M's, and then your double bottoms are going to look like W's. So the best way to kind of get a handle of this too, and I'm going to make a separate video on this, is to just kind of just back test. Go on your chart and just draw out where you see price go up, come down on retrace, go up, go down on retrace, and so on and so forth, and draw that, and then the market's going to start looking differently for you, because actually just right here you have a left shoulder and you have a head, and there's an inverse head and shoulders pattern right here. You have a left shoulder, this is after a downtrend, left shoulder, head, right shoulder. And even though it didn't come down to retest it. If I went down to the 5-minute chart, it probably did, but I won't do that. But you could see that. So you have your neckline, and you could just see it just sharply went right through it, and there's your pattern right there. And at the same time, you saw slight divergence right at this point here, which this would have just signaled you to start looking for buys. If you didn't buy it here off of just a divergence, for instance, or this big engulfing candle, if you bought it at, say, up here, you probably could see consolidated slightly, made this right shoulder, and it just shot right up. But you probably wouldn't have seen that before unless you started drawing your lines. So that was one thing that definitely helped me, and I've learned this from a different trader, is just to start drawing your lines. And that way you can just kind of see the market differently, because sometimes the candles can get a little overwhelming, and you might not see the market as clear as you would as when you draw these out. All right, so let's just go over a couple more. Let's just see if we can find a little bit more. I hope I'm explaining this the best way I can to you guys. I mean, keep in mind, I'm a trader. I still work part-time. I am a location manager at a granite company, but I'm not a teacher, so I hope I can teach this the best way I can to you guys. But as you know, since you purchased my course, there's 24/7 support. Email me, Facebook message me, write in the group, and let me know if you have any questions. I'll definitely try to answer everybody as promptly as I can. And I love doing this. I love helping guys. It's kind of a blessing that I'm able to trade and make money off of this, and be able to help others. So just message me if you have any questions. I'll definitely go over this, and I'll be adding more content. I feel that once my courses are released for a little while, I'm going to get a lot more questions asked, and then I could always update videos as I go and just go over stuff again. All right, now let's see if we find any more double tops. I mean, so I'm trying to find them with divergence, but if you draw your tool right here to follow this move up, this retracement, this move up, this move down, draw your neckline, price retested the neckline, we actually retested a 200 EMA as well. Boom, look at that, and you got profits right there just off of simple drawing of lines. And you grabbed your Fibonacci before just to see if you could hit the 50. Neckline actually went further than that, but that's okay. It doesn't necessarily invalidate it. If you went on the lower time frame, you actually would have just seen a double bottom. See if you draw your lines there. Which again, like I said, if a double bottom forms on the neckline, a smaller one like this, see price came down, went up, and see we have a W. And sometimes that's what helps people see this better. Like I can see this stuff now because I've looked at it so much. But draw these lines, and it's going to definitely help you identify these patterns better. And again, they're not going to be perfect, so that's going to make it even easier for you then. So again, you don't always have to have divergence. You could see these highs stayed pretty much the same like price did, but it still formed a double top. It still rejected off this resistance up here. Neckline was right at the 200 EMA, formed a double bottom. Draw out the neckline, you saw price break right through the 200 EMA, right through the neckline. You saw it retested, long wick rejection, bearish engulfing candle. You entered right here. You're at 144.5, let's say, and you came back down to your next support level from here. Let's say it could have been here. That's 143.6. That's 100 pips right there. Say you had this one drawn out, which both of them work. You can see price broke down through here, came up, retest, came back down, retest, resistance, broke through it, came up, formed a little double top here actually. You can see that. And again, even on this smaller one, I mean, you could just keep going with this stuff. You got a neckline right here. There's your double top. Price came up, got rejected, came down. Price came down, broke the neckline. Boom, retest. Big bearish engulfing candle. You entered right here, and you rolled this down. That right there from this point, let's say from this point here, 141.4, 144.3, rolled it down to somewhere around here, let's say. That's 100 pips right there too. I mean, and that's on the 4-hour chart, which is one of my favorite time frames. That and the daily. But you would have closed out of here because you're probably thinking to yourself, well, how would I know that? Well, you got your support and resistance drawn out into the future. This was from here looking to the left, and you always want to be looking left. You could see your support zone right here, and you would have had this drawn out, and you saw price coming up to it. You saw this long wick rejection. You're taking profits. RSI is on the lower end. You actually start seeing divergence here. You see that. This isn't perfect because I got the zoom in stuff coming up here, but you could see price was here, made a lower low. Price RSI is making actually a higher low, so that could have been signaling you to actually get out of this trade and just take your profits. And I mean, that's 100 pips, depending what lot size you're using. That could be $1,000 trade right there. That could be a $10,000 trade. That could be $5,000 trade. That could be a $100 trade, depending on your lot size and your account balance. But just that alone. Now, neat thing to go over here, because right here, what I noticed as I was drawing this out is we actually have the inverse head and shoulders pattern that formed and failed. And the way it failed was with that double top that formed. And this is basically that where it formed right off the neckline. So we have our left shoulder, we have our head, we have our right shoulder. Boom. Price actually did a double top right off the neckline being resisted here on this right shoulder and came right down. So this is why it is said to wait for it to break the neckline, retest, and go up. That's your safest entries. Now, I don't personally always follow that, but I just that's me. That's my trading style. I do get risky sometimes, and that's just me. But I don't win every single trade. I lose sometimes. I go on losing streaks, and that's okay. But you'll see where you'll be able to catch these types of patterns and just know what to look for. And personally, with the head and shoulders, like I mentioned, I don't really trade these off of the bullish engulfing that would have happened here on this right shoulder, even if that was at the 50 fib, which we could actually take a quick look. And if I draw this 50 out right there to this high, from this low to this high, it's actually not at the 50. So, I mean, that would have just gave me a signal there. But again, with these inverse head and shoulders or regular head and shoulders, I look for it to break through the neckline, retest, and then go. Double bottoms and double tops are just more reliable signals for me, so I do it a little bit differently. Actually, right here, we got another double top. So you're drawing out your lines, and you're going as you go. Price retraced. Drawing your line up. I might not even have to make a video on this because I'm actually just doing it right now. There's your neckline. There's your second resistance. Price resisting. Price came down. Actually, right to this point here. Now, this is a very small one, but price went up to retest. Came back down. And now this one wasn't as big of a trade. Now, this was a smaller double top. It wasn't even as big as this one here with how far it went. But you're always going to be drawing out your support and resistance, and always look for where price might find support. So this was a resistance point, actually lined up right with this support zone before. This is where price was resisting. So you have this drawn out, and if you saw this double top, sorry about that, you see this double top form, you see it right off the 200 EMA, you see divergence, it's making a higher high, and you got a higher low here. And price came down. We have our neckline drawn out. Just trying to make this straight. So you got a neckline drawn out. Price broke through it, came up, retested. We got a bearish engulfing. You entered over here, and you brought it down to this point. I mean, you might have probably just not even entered it at this point when you saw that. But, even scalping. On the 1 hour chart, you probably would have seen this as a bigger double top. And you enter off of it. and you got a nice trade. Now, on a bigger scale of things, what I actually see within all this stuff happening here, I'm going to delete all this stuff. Actually, you know what? Let me leave it open. Let me use a different color. Here's another market pattern that I just saw right now. Actually, let me use the triangle. Shapes will be easier for me to show you. On a bigger scale, we have a left shoulder. We have the head. We have a right shoulder. Look at that. I mean, just as you're going and dissecting and looking, like when you have a trained eye, you're just going to see these patterns. And I'm literally just going off the top of my head with this with you guys, just to show you like how much often this happens. And I literally just took a quick glance and I'm like, wow, I got an inverse head and shoulders on a bigger pattern. And you're going to see these. And the market that's why it's called market structure, because these patterns literally make up the structure of the entire market. And that's why this is so important to grasp, because when you grasp it, everything will just make sense to you, and why price moves the way it does and why it does what it does. And you'll see that it tries to fool you a lot of times, but when you know better, you'll be able to better protect yourself and your profits. So either way, as you're looking at the bigger picture, this might look a little bit better on the daily. See, on the daily, it's a lot more clearer that this was a left shoulder, head, and right shoulder right after a downtrend, and you could see price went right up. Now on the daily, you don't see a break and retest, you just see a strong break. But on the 4 hour, if we go back to where we found it, was that here? No, that was the previous one. Right over here. Alright, so right where we found, we got our left shoulder, we have our head and our right shoulder. You could actually draw your neckline and you could see a perfect retest. And this would have been a crazy trade. Look how powerful this is. You draw your neckline right over here from this point to this point. Look at price. Let me zoom in on that so you guys can really see this, because this is just like wild. This is where you make your money, just being able to recognize these patterns. I mean, you really can't make this stuff up, and I'm going to keep saying that. And I'm kind of annoying myself with saying it, but I'm going to just keep saying it because look at that price. Just break right through that neckline. Look at that retest. You got a candlestick bearish come right to this neckline, like literally like science. Just stop right there. Bullish engulfing. You entered your trade here. You entered your trade somewhere up here. You're going from 143.3 and you're taking this bad boy all the way up to here. You're making, I mean, I don't even want to say it because that's crazy profits right there. You're talking like, you're talking like, wow. You're talking like 600 pips right there. Easy. Easy. Just seeing off of that. I mean, you could have even been conservative. Let's say conservative. You don't want to be risky. You have your support and resistance drawn out, and you have it drawn out, let's say on this one right here. It doesn't do it that well. Like here you can see it touches it perfectly, comes down, but you could roughly just see how price went here and came down. But I mean, you wouldn't have been able to really catch this bar, but still right up here. And now you're trading this. Here's another pattern, which I don't use these too much, but it is a nice continuation pattern that you can use to help you know if you should stay in your trade, get out of it, or keep going. Where are we at over here? All right. It's getting crazy. I gotta check my settings. It just keeps doing that. I don't know why I never did that before actually. But I was able to lower my time frames and just keep it where I was looking. But look at right here. We got a bullish flag pattern. Right here, we saw price go up. You could see it's retesting. It went. Look at that. Grab the trend line. Draw a trend line. Draw little patterns. Better. that is a bullish flag. You see price just consolidating within here, and boom, exploded. Retrace, boom. I mean, this would have been a crazy trade. I'm actually mad. I wasn't actually. I don't think I really got that trade. I don't remember that. But that's one of those trades you take, and my goodness, I mean, you're making a lot of money, a lot of money. All right, so that's basically it, guys. I don't want to make this too long, but I hope you enjoyed it. I hope this kind of opened your eyes to the market to look at it in a different way from the stuff that we both actually just came to find as we were looking on the chart, like this big inverse head and shoulders that actually shocked myself. And these are the trades we look for, guys. These are the confirmations. This is how we look at the market. This is what's going to make everything easier for you and better, and just make you a more profitable trader. And as you saw me drawing these black lines as the market moves, do that. Go back on your chart as if you're literally in a freaking coloring book or this is art class. Like, take your trend lines and draw them so you could see better visually how the market moves, and then you'll find these patterns easier and it'll make you a better trader and you'll see the market better. So I hope you guys enjoyed this video. I'll see you guys in the next one. Peace.